Chase Calhoun, welcome to the Built to Rent Network. How are you?
I'm doing well, sir. How about yourself?
Doing fantastic, trying to stay as warm as possible. So, Chase, you are the owner of Apex Professional Construction based out of Central Arkansas. Can you walk us through how you got started in new construction?
Yeah, absolutely. So I started originally as just a buy and hold real estate investor, and very quickly on, kind of had gotten into really heavy rehab, kind of value add projects, both single family and small multifamily. And it like really quickly got into just like the worst projects that people would pass on, like flippers and stuff, is what we would buy and we would rehab it and usually hold it. So we weren't flippers, we were more buy and hold. Along the lines, it was about 4 or 5 years ago, I had heard of build to rent. It's relatively, I mean, it's been around forever, I think, but it's kind of gotten, that it's been termed, or that term's been thrown around a lot more probably the last couple of years. And I went to a big conference. So it was like actually a big, like a lot of institutional size investors, guys are doing huge, huge projects. And so, but I learned a little bit about it and then I just decided to try it out. So I started my first, we did build two new construction single family homes, that were fully intended to be build to rent and hold in our portfolio. So, it was a little bit of a learning process through those first couple, but they've worked out being great, and so we still own them today, and they've made amazing rentals, and so we've kind of continued to push down that path since then.
Yeah, and I think that that trajectory is what happens to a lot of investors, right? You think of, well, you have to do some forced appreciation in the very beginning. That's the only way to make real estate investing work. And then after a time period, particularly, I think it became abundantly obvious, I think around 2018 for most people, just when the availability of cheap inventory was all gone, right? All of those easy to flip properties were all taken care of. And now we're getting to the point where the prices of a new construction were close to an existing property. And I think that's when a lot of people switched that light bulb. Was there a particular moment where you realized, besides going to that conference, would you realize, hey, rehabbing these properties is getting harder and new construction is the next obvious step?
So a couple things there. From a business standpoint and then from the investor standpoint, kind of separately. From the investor standpoint, it really struck me a couple years ago when I sat down and was going through, with my tax preparer to do my taxes on my rental portfolio. And I bought that year, like what appeared to be a screaming deal on a buy and rehab. Like it was a great neighborhood. Like the house was in amazing shape. It was just a tired landlord who had moved out of state and the house got torn up. It should have been like a slam dunk type deal. But even after it was fully renovated, we had all these unexpected repairs that came up, and it was like the sewer line was rotten all the way across the street, and like all these crazy things. And then we got to those two new constructions that had been in my portfolio now for a couple of years, and it was like there was zero maintenance or expenses. So they're just, it was like it was really, it became very obvious to me on the investor side that I needed to really be careful on these like buy and rehab properties, because like that buy and rehab property looked great on paper, but it was all those unknown kind of nickel and dime maintenance expenses that just made it like I wished I wouldn't even have bought it. And it was the polar opposite with those new constructions. And then for me, with the construction company specifically, is we look to scale. It's just these heavy rehab projects that we've done in the past can be really great to like force value or make, you know, good chunks of appreciation in them by doing these large rehabs. But it's almost impossible, in my opinion. And I know there's guys that do this at scale, but it's very, very difficult to scale that because I was constantly getting sucked back in, with it's just all these unknowns. Once you start gutting these properties and get into them, you're always getting surprised by something or finding something unique. And there's all these weird problems to solve. Look at new construction, it's we continue, to look at ways that we can systematize and scale. We're still doing a lot of infill lots, but even with the infill lots, the new constructions, there's a little bit less surprises. There may not be as big, they may be tighter sometimes when we're looking at the construction costs, because construction costs are high right now. But there's just a lot less surprises, and it's a lot more scalable to me for a business model.
Yeah, it's a very interesting point. A lot of people think of scaling as far as like capacity, and they think of only just the financial component of it. Like, how do I scale financially? And they don't think about the capacity of like, we only have a certain amount of time per day. We only have a limited brain cells that we can kill before before it's over. And when you're thinking about like from the investor perspective, it's like you want to scale up, right? But let's say you got 100 properties tomorrow. that's good. Technically, that would be good scaling. But then your capacity to maintain and manage those properties and have a well-running portfolio becomes extremely difficult if they're an older property. From the new construction side, the capacity of managing them is incredibly easy because there's very little that's going to happen in the first 10 years of ownership. There's less surprises. Uh, and then same thing you mentioned from the builder side, it's, when you're buying a property that's 40, 50 years old, there's a never ending amount of surprises, right? Even the inspection report, and every property is not going to be the same thing. And you're not going to be searching for the same property anyway, right? You might have a criteria, but it's never going to be exactly the same. But it is incredibly easy to look for the same type of lot. If you're looking for a quarter acre flat land with utilities already hooked up, well, those are pretty easy to identify. And then once you figure out which models you like, and most builders like use have a couple of models that they prefer, and their crews know how to knock those models out. So they become very proficient. And it's a way of building a core competency, right? You know exactly which model you like and what type of acreage, and you know exactly how the numbers are going to operate. And now you can kind of just plow forward without having to constantly reinvent the wheel and work with an engineer and have different permits every single time. So, what was the can you walk me through the how you went from 0 to 1? 'Cause were you already vertically integrated, or how did that how did you go from doing rehabs, like, from a people or personnel perspective to having now a full-fledged construction company?
Yeah. So again, as we started to scale the real estate investment portfolio, it's like along the way as we, not from 0 to 1, like I did a lot and wore a lot of hats kind of when I was first starting. But as I started to get to more units, so once we started getting above 10 units or whatever, and we were managing, one and then multiple construction projects at a time, we definitely had to scale through people. And again, a little less systems back then, but definitely more so now. As we pushed into the future. So I'd say over the last couple of years, like that's where most of my focus has been on its scale. And because we're vertically integrated, we do have our internal property management. We have a investment portfolio where we're actively like the same stuff that we're building for customers right now, the same build and rent products we're building for customers. We're trying to build and hold as many of those ourselves as we can because I like them and believe in them. And so the biggest thing for us though, along the way has been kind of people, I think has been number one, bringing the right people in who are truly rock stars at what they do, whether it's on the construction side or the property management side. And then technology is a big one. So as we continue to scale, having the right technology in place, is I'm sure you've dealt with in the past, but especially with us, with the amount of projects we have going on, the like bookkeeping and accounting stuff seems like it should be pretty straightforward, but you get a lot of projects going on at once and you got to have the technology in place and the systems to have that pretty dialed in. And so the people, the technology, and then the systems. So just trying to systematize as much stuff as we can. That way we're not dealing with, surprises or if we've made a mistake once, there's no reason to make it again. Let's try to document it and make sure that we avoid it in the future. And so I think those have been the three biggest components for us scaling to where we're at today. Again, it started, one, it was totally different than it is today, but it's been kind of a learning but important, thing to do along the way.
Yeah, one of the funny things is I'm a big fan of you learn by doing. Like there's a sort you can't go to college to do some of the things that we're doing, right? It's just you have to get your hands dirty. You have to get involved. You have to put 80-hour work weeks, right? It's just the only you have to build callus in your hands to do some of these things. What was one of those like moments that for you was extremely difficult at the moment, but now looking back, you're grateful you had it because you learned a lot from that experience?
So I feel like anybody that's been real is an actual like real estate investor. It's just there's so many of them. It's hard to even pick one. I know with the regular the buy and rehab stuff, the constant issue that we used to run into on those is just underestimating the scope of work and the budget because a lot of times you don't know what you're getting into until you people see these properties and it looks great on paper and you buy it and you open up a wall and realize there's you know we've had some wild stuff where it's just like anything from like houses that never had a water service hooked up to them that we would have never expected that to happen to, entire floor structures rotted out. And so I think just a lot of those underestimating repairs on the rehab stuff on the new construction. I agree. And the first couple we built, like I built them going into it with the full intention that I was going to pay for an education on building houses one way or another. And so we were hopeful that we weren't going to lose money on the first couple of them. But I also fully understood that there was going to be a lot to learn there. Um, Trying to think, I don't think we haven't had any of those like wild, you know, real wild bad mistakes on the new constructions like we have on the rehabs. We have had some silly stuff, like especially on infill lots where you wouldn't have expected it. And one that comes to mind recently, like we're building four duplexes on a cul-de-sac, and they're infill lots, but the entire subdivision has been developed. It was developed years ago, and we knew that we had to run sewer across the street to tie into the sewer main, which we had budgeted for and expected. But when we cut the asphalt to go across the street, there was a boulder the size of a car, like 4 inches below the asphalt, which is not, it was not the right way when you're putting streets in. Like there's supposed to be subgrade and stuff that's there in case you ever have to dig it up. But the roads were put in probably 20 or 30 years ago. And obviously that wasn't checked on or a rule back then. And so we spent a lot of time and money, jackhammering through a ginormous rock to put a sewer line in. And so we do have that kind of that silly stuff that pops up occasionally, but it's less on the new construction. I just go back to the biggest thing was probably on the front end, maybe not knowing the cost, and then running into estimation issues even on the new construction, and then just those occasional kind of minor unexpected things that pop up, but it's less than the rehabs by a lot.
Yeah, I get a lot of investors that reach out and they want to actually, buy a land and develop it. And I always tell the investors, listen, to 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 do build to rent as an individual investor, there was a short period of time where it made sense for a typical investor to do. That time period has long gone. And a couple of things have
Yeah.
changed over the years, specifically when it comes to the lending criteria, where most lenders are looking for an experienced builder to actually take on some of these investment properties. So your first couples are going to be challenged, specifically from the finance perspective. We're again, they're looking for at least 5 new builds in the last 2 years. And most, I mean, you probably had that experience from your rehabs that they gave you credit for. But for the most part, most investors who don't have that experience, you're going to pay, hard money loans that are 12, 14%. On top of that, you're talking about multiple closings where you're buying the land closing, doing the construction loans at closing, then you're doing your end loan that's a closing. You have it could be 8 months to a year and a half, depending on the builder, if you're doing ground up construction for the entire process. And I always look at it, that money that you're putting into that new build could have otherwise gone to an existing property that cash flows for you today. Additionally, when you have, like what you mentioned, surprise costs that come up, just the dump tax, things you don't know. The other biggest challenge people don't give enough credibility to is when you're doing something like this is true for the rehab, but especially true in new construction, is everyone's going after your profit margin. Like your profit margin is everyone else's opportunity. So the ability to keep the cost of a build low is one of the most challenging parts for a developer. That if you are trying to do this from out of state, you have it's really difficult to do. So I want to understand from your perspective, obviously knowing that everyone's attacking your profit margin, like what do you do to safeguard so that your expenses for your builds don't go, into the red, right? Don't force your project to go negative.
Yeah, it's tough. So one thing I would say, so we're obviously in this and we believe in it and we'll continue to build ground up new construction rentals because we want to grow our portfolio that way. And then we'll continue to do them for other people because it just helps fuel what we're already doing. It keeps our subcontractors busy and kind of an economies of scale thing for us. Um, Hindsight being 2020, had I known how tough it is to run a profitable construction company, I probably would have picked a different industry to go into because the profit margins are very, very tight. And I mean, very, very tight. There's no other, I have a lot of friends who are successful business owners, and I have a handful of them that are builders and they're successful at it. But there's not a lot of people that make it in the building industry because of that, because the profit margins are so tight on new constructions, especially today. Um, it just makes it really, really tough. So one thing you brought up was land development. I would love to spend more time and do some land development so that because we would almost eliminate those surprises. So I think it would be worth it. The problem is the cost of land development per lot right now is so expensive. It makes it really tough with build to rent, in my opinion, unless you're doing it at scale. We've had a lot of success in the market where we're at with infill lots. Again, we'll get those occasional surprises, but usually we can get decent deals on lots. We're getting the lots for cheaper than what development costs would be, which helps bring the cost of the house down, which ultimately brings the cost of the rent down and makes it more successful. And then as far as us, just keeping it tight and making sure that because it's got to be profitable, otherwise it's not worth doing. We've gotten really good at dialing in our construction budgets and our estimates. Um, that's through a lot of learning the hard way and the missing the stuff and then wondering why it was more expensive at the end. But we've got a fairly detailed budget template that we use. That's really line item. It's like anything on a new construction project that we're going to spend money. If we're going to cut a check or pay a vendor, whether it's materials or labor or anything, that's probably on there on that line item. And we've got past data. So we're not just putting down what we think it's going to cost today. We're putting down what we think it's going to cost today, and then we're referencing it to either the same or very similar new construction. And then that really helps us get dialed in. We generally, I like to say that we're, within 3% plus or minus on what we think it's going to cost. So I'll hear people occasionally that are like either a new builder or sometimes they're experienced builders, honestly. And they'll tell me, they're like, oh, this is what we're building it for per square foot, or this is what this is going to cost. And I'm like, there's no way. They're like, there's literally no way that you're going to build that for that much money, because it's just, and I don't think it's that they're doing it on purpose. I think they just don't know sometimes. They're not tracking it close enough. So they don't know what their actual true costs are on stuff. And then on top of that, running a business, we've got overhead expenses and things that add on to there as well. But I think just really being dialed in the numbers and then trying to not get surprised by anything. Again, those occasional things will pop up, like the boulder under the street, or a shallow sewer line or something like that really is hard to catch. Some of it's just, I think it's a lot of experience and just making sure we know what we're truly spending on each property, and just being honest with ourselves going into it.
Yeah, one of the advantages that you have is you're an investor. So you're looking at the deal from the perspective of an investor. And then a lot of times, for a lot of the builders we work with, if they don't sell a property, they're perfectly fine because they know they can rent that out and cash flow it themselves. So they win either way. They are the backstop to any bill that they have. Now, with 80% of our investors, most of them being out of state, a lot of them California, Illinois, New York, New Jersey. And once you decide to be an out-of-state investor, it's really the entire country opens up to us. Now, being that you're a builder based out of Central Arkansas, for the investors that are not in Arkansas, can you walk us through the landscape of why Arkansas makes sense? Obviously, we're seeing that in a lot of other markets, there's some negative appreciation happening right now. So Arkansas is seen as a safe haven or more reliable market. But can you give us into more details into the markets you're currently in and why you like those markets?
Yeah, a couple things, and something else I would like to touch on too with out of state investors, but we can start with Central Arkansas as a whole. I'm not from Central Arkansas originally, and so we've been here for 8 years in this market. And I would like to say that there was some I spent a lot of time in analysis, and this is where I ended up, but it was almost more of either a God thing or a luck thing or a combination of the two that we ended up here, and it's worked out very well for us. And so Arkansas is a great market. It's like you said, it's not, you don't get big upswings or downswings in appreciation. We have seen, people call it appreciation over the last couple of years, but I would argue that it's just inflation directly. It's not that it's appreciated. It's just that things have gotten more expensive. Therefore, the prices have shifted right along with that. Um, Central Arkansas, or Little Rock specifically, is a lot of times considered a tertiary market because it is smaller, but it's got a lot of good, stable jobs in the area. Central Arkansas, or Little Rock specifically, where I'm at, and there's like 5 major hospitals, and one of them's like a large, medical school. People come from all over the world to go to medical school there. There's a ton of manufacturing in Arkansas, even more than I realized when I first kind of moved here. And then there's been a huge push, and there's a push lately to bring manufacturing back to the United States. But even prior to that, there was a big push by Arkansas to bring manufacturing into Arkansas. So we constantly see these large manufacturing companies coming in and bringing, decent amounts of like really good jobs for, especially for workforce housing. And then the other thing with Arkansas, again, I wish I knew this when I chose Arkansas, and I didn't. It just kind of ended up to be in my benefit. But Arkansas is probably one of the most, if not the most, landlord-friendly states in the United States. And so I actually came from California, and so I'm very familiar with how it is to do business there. And it's about as polar opposite as you could get as far as landlord-tenant laws, almost to a fault. And so we only own and operate really nice, high-end, mainly new construction rental housing. But it's when it comes to, God forbid you have a tenant that's not paying and you have to go through an eviction type situation, it is just very easy to navigate and quick in Arkansas compared to almost every market. And then one thing it's worth mentioning, I think, that's just like you said, I have a unique perspective because I started as a real estate investor. So anything we're building, it's really built through that investor lens. We won't build something as a build to rent if it's not something we would want to own ourselves. Opposed to a lot of builders that are great builders, and I've got a ton of friends who are great builders, but they have a different mindset when it comes to building because they're used to building spec homes, and there's a lot of times it's like the more square footage they cram into a building, the more money they're going to make. And if I try to tell them that we want to build stuff smaller, so even our draftsman, a lot of times we're having to push back on him because we're telling him we want it smaller because we can keep it more affordable for the end tenant, and it's more affordable for us or for the investor. And so it makes sense for everybody. It's hard for a lot of builders to wrap their head around that because they're not investors. And then the other thing so lived in California my whole life. I was born and raised in the San Francisco Bay Area. I had wanted to get into real estate investing in 2008, 2009, 2010 in the San Francisco Bay Area. And unfortunately, I let other people talk me out of buying these houses in the East Bay for like $100,000, and because they're just going to crash again, or why do you want to deal with rental properties? And, hindsight being 2020, I should have bought everything I could have because would have been a really good time to get in the market there, but I didn't. And then fast forward a couple years later, I was really ready to start investing, but the out of state real estate investors, it's amazing that it's become so mainstream, but like I hadn't even heard of that back then. I didn't know that that was an option. So we literally moved to Arkansas to start investing in real estate because it's somewhere that made sense to do so. And now there's all these resources for people to do it out of state. And so since, even before we were doing the build to rent construction, we've helped, on the real estate side. Like I'm a real estate broker, and we used to help out of state real estate investors buy from all of the United States. And I can really I can understand what it's like to be in their situation, and I say stuck. I gotta be careful because some people get upset at me, but I came from California. I say if people are living there, they're stuck, and whether they realize it or not. But that's another topic. But they want to invest. It just doesn't make sense there. And so having somebody that is understanding of that and is doing things with their best interest in mind. And like in our case, if we build a build to rent product, whether we keep it or sell it, like we're building the same quality product, I think it's super important. So whether somebody chooses Arkansas or they choose somewhere else, it's just making sure that they're partnering with somebody who truly has their best interest in mind and would treat it like as if it were their own. I think it's very valuable. And we have a unique perspective because I had wanted to buy rental properties when I lived in California, but I never heard of Bigger Pockets back then or out of state real estate investing. And so I thought the only way to do that was to pack up and move. And so, now realizing that there's other options, but at the time I can see that perspective being there. And a lot of the clients that we've worked with, I mean, we have several long-term clients that have never been to Arkansas, but they own investment properties, and it's been really cool to help them do that.
Yeah, there are a couple other big advantages of Arkansas. One, it's not a very transit oriented, so people aren't coming and going. It means your tenants are going to stay a lot longer.
Yeah.
People are more invested in the community themselves. If you're moving to Arkansas, I mean, most people grew up in the area, but if you're moving to there, is you're looking for a sense of permanence. You're not like it's not like LA or Miami or someplace where you'd go for a time period, then you'll leave right away. Usually, you're kind of set put. The second thing you touched upon this was just the value that you get from there. Like in some other markets, you have to try to go so luxury, so over the top and chase this really high rent, and you may or may not get it. In Arkansas, the range on rents is very low. Like the high and the bottom are going to be like $50 apart. So you're not going to land too far away from the projected rent because you're not targeting a really high rent. You're targeting a more value renter. Which is a good point. The other part is when it comes to natural disasters. Plenty of water in Arkansas, right? You have a river running right through Little Rock. You're not going to get the blistering colds of further north. You're not going to get the droughts. You're not going to get hit by the hurricanes. So for the most part, from a natural disaster and insurance perspective, you're pretty well protected from that end as well. Uh, I do wanna get to what you're currently working on now. Can you give us a kind of a suite of the products you're currently coming out with in the next couple of months?
Yeah, absolutely. So the stuff that we're working on, if either finished recently or working on today is mainly single family and duplexes, right? So single family and small multifamily, build to rent properties. We try to build what, again, I think the investor lens helps a little bit. We're really choosing the product we're building based on kind of the neighborhood and the tenant class that's going to be living in it. So we're looking at our end user first. And so we're building anything right now from two bedroom, like smaller two bedroom, one bath, duplex units, all the way up through like, three bedroom, two bath, single family homes. More recently, something that we've had some pretty good success with is four bedroom, two bath, smaller single family homes without a garage. So again, just really looking at the neighborhood that we're going to be building at, what we think the end tenant is going to be able to afford comfortably for rent, and to build something that's going to fit that purpose. So again, with the duplexes, a lot of two ones. We're building some really nice three twos right now, duplex units as well. A little bit higher rent, more similar to like, I call them townhomes a lot because they look and feel more like a house. That's just, you have that adjoining wall. The smaller two ones really do feel like a duplex to me. But that's it right now. Just the duplexes and single family homes.
Yeah, again, focusing on those value tenants. And really the goal is to have a tenant for life. Like the tenants that you're targeting, and that's the problem also when you chase really high rents is, when you're charging 2,500 in rents, like those people are homeowners. They're going to be there for a year. They're going to eventually move out and you're going to have a revolving door versus a more value renter that's looking to be in a good school district, probably a family with school-aged children. They're not looking to move. They're looking to, sign their kids up for Little League baseball and be there for a long time. So,
Yeah.
as you look towards the horizon, can you kind of pinpoint some of the challenges and opportunities that you're kind of foreseeing happening in the future?
Um, I think for us right now, I think the biggest challenge that we've been dealing with probably the last year and a half, and I still see as a challenge today, but I'm hoping it's going to improve in the near term, is interest rate. So the interest rate environment, makes it tougher right now just because of the costs of building for us, like the holding costs and carrying costs are a little bit higher. So again, it's definitely a challenge that we're dealing with right now. We've had good luck still, building this kind of product and still having good success with it, even though. And then opportunity wise, I would say with build to rent specifically, fortunately or unfortunately, I think that our society is going to continue to shift towards a more of a renter nation than a homeowner nation. Um, I see build to rent is just a lot of opportunity there for that. There used to be a bridge where you were a young person, you would rent an apartment just long enough to kind of get stable income, and then you would buy your first home. I mean, that's even for me, like that's the path that I took. And I see less and less people taking that path today. But I think this same people, like even though they don't want to go out and buy their first home, they still get ready to kind of graduate from an apartment to a house. And so I see a lot of opportunity with the build to rent specifically because of that. The townhome units and the single family houses, they definitely don't feel like living in an apartment. So I've only lived in an apartment once in my life. I will personally never live in another one unless I absolutely have to. And so, but I would have no problem living in like a duplex unit that's a nice, 3-2 with a small fenced in backyard because it feels like a house. It's like if I had to rent, it's the kind of stuff we're building is something that I would want to live in. And again, it's just a lot of these people, and we see it with some of our tenant class, is just they could buy a house if they wanted to, or they could buy where they're living at. It's just they don't want to. They don't want to deal with it, or they don't want to deal with the process. And so it's like, even though I may not agree with it, it's just I think we're shifting more towards that. So that's why I continue to see opportunity with the build to rent specifically, and we'll continue to push on that ourselves.
Yeah, and I think a big part of that is just generationally. Like I'm part of that generation that we grew up in a time period. We graduated college when there was no jobs, right? So we graduated
Yeah,
in debt, no jobs. And then you also see a lot of your parents, aunts and uncles lose their homes. So the idea for a lot of the younger generation, younger, not, I mean, we're, we're in our mid 30s and 40s now, but our generation just saw our parents lose their properties. So a lot of us, and not only that, but we don't buy stuff anymore. The things we buy are more disposable. We're looking for more experiences. We like more flexibility. So we care more about the lifestyle that we can live as opposed to actually owning assets, which again, to your point, is a mistake. I'm teaching my kids to own assets. It's the only way to build wealth in this country, especially with inflation and everything else. You have to own the asset. But just realistically, a lot of people don't want to do it. We're also a generation that's not good with our hands. We don't want to fix anything. So
yeah.
if we can pass it on to someone else, that's what we're going to do. Do you have any final messages or anything you want to share? Words of wisdom to someone maybe getting started now before we finish the podcast?
You gotta do it. Like, you gotta go, you gotta do your first deal. That's the hardest part, I think, and it's like, you want to be a good deal, but even if it's not, like, I almost think it's better to just get started in investing. I think a lot of people, including myself, like I told you that I was thinking about buying these foreclosures in the San Francisco Bay Area when they were, pennies on the dollar, and I kinda talked myself out of it, and I just, like, thought about it, and I knew I should do it, and I just never did it, and looking back, like that's the one thing that I could have done differently that would have, been a game changer for me even earlier on is you just got to get started. I think like build to rent, new construction rentals is an awesome asset class. I think it's a lot less risky for people to get started. So I'd highly recommend people look into that, whether it's in Arkansas or somewhere else. It's just you're less likely to have those surprises down the road with the maintenance capex stuff that some of these older rehabs get. Most important thing is just whichever way you decide to go, is you just got to get started.
Yeah, I agree. Get on first base. Your first deal may not be a home run. We grew up watching Bigger Pockets, so we always hear of these phenomenally great deals that exist. Most investors aren't doing those deals. Most investors are doing what's tried and true. You want to validate the data. You want to make sure that the downside is very limited, and you think about like major repairs is gone, surprises with the property not being desirable, things like that. So you want to protect your backside. But for the most part, you have to start forward. And it's actually easier to go ahead and make mistakes when you're younger. The last thing you want to do is be, nearing retirement and then freaking out last minute. You have to make some investments to fund your retirement. Do it early, do it while you're young and while you still can. Well, Chase, I definitely want to thank you for your time today. You can get more information on Chase and his company at buildtorentnetwork.com, and we'll see you all next time. Take care.